Good afternoon. My name is Amber Mueller with Community Connection. Welcome to the Community Development Block Grant webinar on economic development for entitlement communities. The call will last approximately 90 minutes. All callers should be muted due to the high number of participants. The slides are posted on the Community Connections website at www.comcon.org/programs/economic.html. The webinar will be recorded for future use and made available for viewing and downloading. If you are having audio difficulties, use the telephone instead of the computer. If you have questions on the material that is covered today, you are welcome to submit them through the presentation using the questions function on the GoToWebinar toolbar. A resource advisor will forward some of your questions to the presenters to answer at the end of the webinar. HUD will be developing additional guidance on economic development. I now turn the presentation over to Mark Walling.
Good afternoon. I'm Mark Walling, and I've been around a long time. I worked in the San Francisco office and had the opportunity to work on economic development specialist. It was that role where I learned the complexities of CDBG-ED. But probably the most important lesson I learned was that grantees have to make a strong commitment in order to achieve successful economic development. Success starts at the top and ends with capable management and staff at the program level. So hopefully we're going to build that for you today. There's a broad range of economic development activities eligible under the CDBG program. Although people think of economic development as a unique CDBG activity, there are several different approaches by which grantees can carry out economic development activities. The first of these approaches is a special economic development activity, which is comprised of basically three types. The first type of assistance involves activities for developing or improving real property, and they're carried out by the grantee or subrecipient. These activities are designed to expand or attract commercial or industrial businesses or enterprises. For example, let's say a city wants to develop and own a business park. They could, 1, acquire the land, 2, install water and sewer lines, and 3, install underground cables, such as for internet or TVs, so on and so forth. These activities are limited, however, in that they must be carried out by the grantee itself or a nonprofit subrecipient. The second kind of special economic development is the provision of assistance to for-profit businesses. These are activities designed to stimulate or shore up businesses that will in turn create jobs. For example, financial assistance to purchase inventory equipment or acquire and improve property, such as a renovating of a business facility. Services and technical assistance is another category, our third, in special economic development. This kind of service assistance can be provided to businesses such as in such capacities as legal or accounting services or job hiring or job training assistance for newly created positions. We also have the creation or expansion of microenterprises, which is an eligible economic development activity. And in addition to the financial assistance, grantees can provide other services essential to small business or persons desiring to create new businesses. Grantees may also provide assistance to business that is located in one's home by rehabilitating the home and creating a business space environment, such as a daycare facility. Grantees may also support local business by working with a community-based development organization, or CBDO as we call it. CBDOs are locally organized entities designed to facilitate a more targeted approach to neighborhood revitalization and economic development. Throughout this presentation, we'll learn how these CDBG-assisted economic development activities can be undertaken to increase economic opportunities for low and moderate income residents. As we proceed, we'll also highlight the national objectives typically associated with these economic development activities. We will also discuss how certain activities trigger the application of our public benefit standards. The standards ensure that there is sufficient public benefit derived from the investment of CDBG dollars in an economic development activity. We will discuss these standards in detail later in our presentation. So let's start our discussion with a category known as special economic development. This is under Section 572.03 of CBG regulations. This category is very broad, one of our most commonly used economic development approaches. Grantees can undertake any of three possible approaches to economic development. As I said earlier, the grantee or its subrecipient carry out an activity, or activities can be assistance directly to for-profit business, or they can provide technical assistance to for-profit businesses. So the first approach is those carried out by the grantee or the nonprofit and related to real property. These activities are designed to sustain, expand, or attract commercial industrial businesses or enterprises. Let's say a city wants to develop its in-order business park. I've already said that, so I'm going to skip that. But we must remember the activity must be carried out by the grantee or its subrecipient. It must be under their control. A real example of this activity was a city in which a commercial almond producer was considering leaving to relocate in a smaller city closer to the almond orchards. The city made street and rail improvements that assisted the business in significant cost savings, and as a result, the business stayed in the city. The city saved over 400 low and moderate income jobs from leaving the community. Another example is where a nonprofit constructed a business incubator. This was a newly constructed building for housing and supporting small business startups. However, CDBG could not be used to pay the operational costs of the incubator itself, nor could it pay for business services, such as counseling or training for the incubator tenants, because this category is not allowed the providing of financial assistance or services to the businesses. Remember, it's the grantee or a subrecipient, and it's real property. So this is restricted by that. So you get the building, but you don't get everything on the inside. Our second approach to economic development is the provision for assistance to for-profit businesses. Under this category, the grantee can provide financial support to a business in return for the business creating economic opportunities through jobs or increased services for a neighborhood. The financing is typically in the form of a loan guarantee, interest write-down, or other mechanism used to assist the business financially. The CDBG assistance can pay for a range of costs, such as acquiring land or buildings, rehabilitating or constructing a commercial site, or for purchasing inventory or business equipment. Business services may also be paid for at an allowable cost under this category, such as business legal assistance or marketing assistance. Even the risky category of working capital can be made in this particular under this activity. Let's take another example. A for-profit manufacturing business wishes to expand. Assume that in order to expand, they not only need a larger factory, but also need new equipment installed. This is the category that can be used to provide both types of this assistance, expanding the building and purchasing and installing the new equipment. But who will operate the equipment? That brings us to our third approach. Under the special economic development category is the provision of business services that can be offered in conjunction with an otherwise eligible economic development activity. Under this category, grantees may pay for costs such as reviewing and underwriting business applications or processing loans funded with non-CDBG funds, and perhaps most significant, for services like job training and job placement activities for the persons who are taking the jobs created by the business. This is where we can assist the business by financing the training for the operators to operate this equipment. So we have the two-pronged approach here. We do the physical plant, and then we train the employees to operate the equipment. This is an important factor in flexibility because it's a way to do targeted job training. That is not under the grantee's 15% public service cap, where such activities are typically found. The related economic development activities does not need to be funded with CDBG dollars. It just has to be eligible under this category as assistance to a for-profit business. As an example, the business expansion may have received financing that was provided through tax increment funds. CDBG funds are used for job training. But take care, because once the CDBG funds enter the equation, the project is a CDBG-assisted activity, and it must meet CDBG requirements. For that reason, the Economic Development Services category is most often combined with other CDBG-assisted economic development projects that don't conflict with other sources of funding that cannot accept CDBG's limitations. So the principal difference between these three types of special economic development is as follows. It's one, an approach is limited to the grantee or its subrecipient to carry out real property activities and improvements, and the other two are under the direct assistance to for-profit businesses as financial assistance and technical assistance. Let's talk about ED tools a little bit. The CDBG regulations offer several financing tools for assisting businesses. Grantees can provide loans, grants, loan guarantees, and other types of financial assistance. The grantee could choose any or all of these tools in designing their economic development program to address the needs in their community. The national objective for special economic development may also vary depending on the project. Many ED activities qualify under the low and moderate income job creation or retention national objective. However, certain projects can qualify under the low-mod area benefit category or under the slums and blight area national objective. Once we finish discussing economic development categories and related activities, we'll cover the national objectives in more detail. Use of special economic development category triggers the public benefit standards. This includes economic development activities done by the grantee or the subrecipients, as well as direct assistance to the for-profit and economic development services. These standards require that special economic development activities create a sufficient level of return or benefit for the CDBG dollars invested. Return under the public benefit is defined according to the number of jobs created or retained and the number of low and moderate income persons who receive neighborhood goods and services. Again, we'll cover this shortly in more detail. My next category is technical assistance. We talked briefly about the provision of technical assistance to businesses. This kind of assistance is often designed to reduce the risk of business failures by helping businesses with startup strategies, in expanding or stabilizing their existing business. Technical assistance is often made in conjunction with financial assistance, as I mentioned earlier, but not always. Examples of types of assistance are developing a business plan, providing legal or accounting services, marketing strategies, and or human resources. Offering technical assistance is a good program management tool also because it helps the grantee reduce risk and the possible loss of CDBG funds. Rather than simply providing financial assistance to the business, grantees can assess the business savvy and ensure it has sufficient management tools to succeed. Often this type of assistance is delivered in partnership with small business developers. In fact, in some communities, they require businesses to undergo TA before they can obtain CDBG financing. This is typically for programs that focus on small business startups. Some more on TA. There are several different eligible categories that can be used to pay for CDBG-funded technical assistance and or training activities, TA as we call it. Under the special economic development category, businesses can use CDBG assistance to hire experts to provide advice on key topics. However, it's important to remember that this is deemed to be an investment in the business, and therefore it triggers all of the CDBG requirements, including public benefit standard requirements. In certain cases, technical assistance or job training can be carried out as a public service, but that's a public service and it's limited to the 15% public service cap. There is some wiggle room, however, where the technical assistance is carried out by an entity known as a community-based development organization. If the CBDO is undertaking activities designed to increase economic opportunity, or if the activities are being carried out in a HUD-approved neighborhood revitalization strategy area, the activity cost can be outside the grantee's limiting 15% public service cap. We will discuss CDBOs in more detail in a few minutes. It is important to note, however, that like all other CDBG activities, TA and training activities must meet a national objective. This can be particularly challenging for TA activities that are not coupled with financial assistance, especially when the business does not qualify as a microenterprise under the low-mod limited clientele provisions. Thus, the possible national objectives for-profit technical assistance includes low-mod area benefit and low-mod job creation and retention, as I mentioned earlier. And on rare occasions, the slums and blight national objectives can be used. However, it's important to note that low-mod area benefit activities are only applicable for businesses that provide a service to residents in a low and moderate income neighborhood. A grantee may provide assistance to a neighborhood-based grocery store, for example, or a neighborhood laundromat. But here's a true story. Bad example of a low-mod area benefit. A grantee provided financing to assist a Porsche dealer located in a low-mod neighborhood. But I had to ask, who are the beneficiaries? Where's the service area? Well, the service area was city and county-wide, and most of the low-mod residents don't drive Porsches. Duh. So that didn't work too well for them. The low-mod income job creation and retention national objective would be possible, but the business would need to demonstrate that due to the training or TA provided that it was either able to create or retain jobs where 51% of them were taken or held by the low-mod income persons. This can be difficult to demonstrate if TA is provided to an existing business. And we must realize that the limited, low-mod limited clientele, limited housing, excuse me, low-mod housing and slums or blight national objectives are rarely, if ever, used for such business assistance. Choosing the wrong national objective for business technical assistance is a common program error. Certain grantees believe that similar to administrative activities, the business technical assistance does not need to meet a national objective, but that's not right, okay? Other grantees seem to think that these activities can be qualified under the low and moderate income limited clientele provisions, but this is not possible, as I mentioned earlier, unless they're a microenterprise, and we'll define what that is a bit later on. Still, other grantees believe that they can always assume that the CDBG TA and training helped to retain jobs at the business, and thus the low-mod income national objective would be met through the jobs. This is not necessarily true. The grantee and the business would need to document that without the CDBG-funded technical assistance and the training, that the jobs would be lost. The CDB regulations allow flexibility in how jobs are counted for TA-only activities. However, in these cases, the CDBG low and moderate income creation and retention national objective can be met by aggregating all the jobs created or retained by all the businesses who receive the counseling or training during a given program year. However, this flexibility only assists grantees to meet the requirement that 51% of all new or retained jobs must be held by low and moderate income persons. It does not change the fact that in order to use this national objective in the first place, each business must indeed be creating or retaining jobs. So, the national objective is an important issue when considering providing business technical assistance or job training programs, and grantees must carefully design their programs to ensure that they comply with the national objective requirement. There's another category of economic development activity that's seldom talked about and sometimes confusing because it sounds similar to special economic development, but it's not. And it's because it's difficult to locate in the regulations, probably. Here are the differences between the two types. Commercial rehabilitation is not a separate eligible activity, but that rather is a part of the rehabilitation regulations at 24 CFR Part 57202 that covers rehabilitation, including residential rehab. This type of assistance, commercial rehabilitation, provides for activities that are exclusively focused on the rehabilitation of real property. It does not provide for other business costs possible under special economic development activities, however, such as the purchase of equipment or provisions of technical assistance. The regulations permit the commercial or industrial properties that are public or privately owned. However, the commercial rehabilitation section of the regulations imposes significant restrictions on the type of rehab that may be performed under the category. If the building is owned by a private for-profit company, as most of these types are, then the rehabilitation is limited to the exterior envelope of the building and to the abatement of exterior and interior code violations. The grantee cannot fund other types of repairs under the commercial rehab portion of the regulations. For example, the grantee cannot replace carpeting or paint on the interior walls. Because of such restrictions, the commercial rehabilitation category is most commonly used for facade programs. In fact, that was basically the intention for including it originally. For example, some grantees offer assistance to businesses located on the main street or the neighborhood commercial areas to improve the facades of their buildings, and the stores on the main street or perhaps pedestrian mall areas. If the business needs additional rehabilitation assistance beyond the exterior of the building and code violations, or if they need technical support that goes beyond just rehabilitation, those activities can be done under the special economic development category. So at this point, you may be wondering why all grantees do not skip commercial rehabilitation and simply go to the activities of special economic development, since this is a much more broad category and since it also allows rehabilitation. Well, the primary reason is that some grantees choose to fund this under commercial rehabilitation because commercial rehabilitation is not subject to the public benefit standards. This is, the public benefit standards can be limiting. So we'll talk more about the implications and the distinctions of the public benefit standards when we cover them later on. Note that both commercial rehabilitation and the special economic development approaches must meet a national objective. Again, the possible national objectives which may be applied to commercial rehabilitation are the same as those that are available for special economic development activities, except that under limited circumstances, commercial rehabilitation can be done on a spot and slum blight activity basis, and special economic development cannot. So, what have I told you? I've told you there's basically two types of economic development. One is for the grantee to carry out, and one is for directly assisting for-profit businesses, either with physical things, improvements, and installations, and one is technical assistance, which builds skills and capacity. All right, remember to send your questions in so we can answer them at the end. And now I'll turn the mic over to Ms. Valerie Brown.
Thank you, Mark. It's a pleasure to be here today to discuss economic development with you. And I'm first going to talk about microenterprise assistance. And under this eligibility category, grantees provide financial and other assistance to small businesses which qualify as microenterprises. In the CDBG program, a microenterprise is defined as a commercial enterprise that has 5 or fewer employees, one or more of whom owns the enterprise. Notice that this test is not based on full-time equivalent positions, or FTEs as we call them, but rather on the total number of employees. For example, if a business has 6 part-time employees, this business would not count as a microenterprise. It is also important to point out that the definition of microenterprise under the CDBG program is different than the definition used by the Small Business Administration. The SBA bases its definition on the revenues of the small business. The CDBG program contains no revenue tests when determining which businesses qualify as microenterprises. Therefore, if a grantee or a subrecipient wishes to combine these two funding sources, it would need to comply with both sets of rules and regulations. Microenterprises may be existing businesses that are looking to stabilize or expand. In addition, assistance can be provided to a new business or to a person who is working towards opening a new business. There is a wide range of assistance types that may be provided to the microenterprise. First, the grantee may provide the business with financial assistance such as a loan, a grant, or a loan guarantee. The business can use this assistance for a variety of costs, ranging from acquiring or rehabbing a commercial property to paying for soft costs, such as marketing or training of employees. In fact, there are no programmatic limits on how these funds may be spent as long as the costs are reasonable, necessary, and related to the business and are not in violation of the costs prohibited in the CDBG regulations. Obviously, the grantee may want to impose additional restrictions on its local microenterprise program. In addition to this financial assistance, the grantee may also provide technical assistance, training, and other advice to the business owner. Note that this is a special flexibility provided to microenterprises and outside of the public services cap, and it is not considered a form of special economic development. In addition, the grantee may provide general support to the owner of the microenterprise. This would include costs to personally assist the owner, which will enable him or her to expand or build upon the business. For example, if the owner of the business needed child care assistance or transportation subsidies so that he or she can get to and open the business, this could be provided under the CDBG program. This tremendous flexibility is outside of the public services cap and is categorized under the microenterprise category. Grantees will often ask HUD if these same services can be provided to the owner's employees outside of the public services cap. Now, while this particular subsection of the microenterprise eligibility category is specific to the owner of the microenterprise, the grantee could provide financial assistance to the owner, and then the owner could use this assistance to pay for such services for his or her employees. These costs would be also categorized as a microenterprise activity and not as a public service, and therefore would not be subject to the public services cap. Now, if the grantee wants to manage a microenterprise program, the grantee may pay for costs for those staff to enhance their capacity to do these activities. For example, a grantee could use CDBG funds to pay for staff to attend an ASBA conference on providing services to small businesses. This flexibility is particularly important because it is outside of the grantee's administrative cap. In addition to all of this flexibility in terms of the types of possible assistance, it is important to point out that there is no limitation on how much CDBG assistance each microenterprise may receive. So a grantee may elect to provide only TA and training, or it could elect to provide substantial financial support. Obviously, the grantee should develop program procedures to ensure that all CDBG-assisted project costs are reasonable, eligible, and necessary. Because microenterprise activities are their own eligibility category, they are not subject to the public benefits standard. The microenterprise activities are required to meet the national objectives. However, there is a special flexibility provided under the low mod income limited clientele national objective if the owner of the microenterprise is of low and moderate income. The grantee can still assist owners who are not low moderate income, but those activities must qualify under another national objective. Now, economic development activities may be also undertaken by a community-based development organization, or as we refer to them, CBDOs. The entitlement program has specific rules about the type of nonprofit organization that may qualify as a CBDO, including regulations about its board structure and its geographic focus. All CBDO activities must be related to community economic development, neighborhood revitalization, or energy conservation. Community economic development activities are projects or programs that have a specific purpose to promote job creation or economic opportunity. Neighborhood revitalization projects are those that are intended to help revitalize a specific area within the community. It is important to note that neighborhood revitalization activities should be targeted towards a selected area and cannot be conducted on a citywide basis. Nonprofits undertaking CDBO activities have certain regulatory flexibilities under CDBG that other partners do not. As it relates to economic development, the most important flexibility is that any job training and placement efforts undertaken as a CBDO activity are exempt from the public services cap. However, economic development activities conducted by a CBDO must still meet a national objective. In addition, these activities are are still subject to the public benefit standard if they would otherwise have been funded as a special economic development activity. For instance, assume that a grantee provides funds to a CBDO to build and rent out a commercial building. The net project would still be subject to the public benefit standard. Next, we move on to infrastructure projects that are developed in order to enhance economic opportunity. Infrastructure development often accompanies large economic development activities. For example, a grantee might build a water and sewer line to an industrial area in order to entice businesses to locate in that area and create new jobs. Usually, these types of improvements are publicly owned, and so they are qualified as a public facility. However, in some instances, the improvements are owned by the business and are on their site, such as an on-site drainage system. In that case, the activity is qualified as special economic development. As with other eligible activities, infrastructure for a business must meet a national objective. These activities are almost always done as a low-mod income job creation and retention activity. However, it is important to point out that there are special provisions that are applied to infrastructure projects that are qualified under the low-mod income jobs national objective. If the CDBG cost per full-time equivalent or FTE job created or retained is less than $10,000, then the grantee can simply add up the jobs that are created or retained by the specific businesses which directly received the infrastructure at the time that the project was funded. However, if the grantee spends more than $10,000 per FTE created or retained, the low-mod jobs national objective is based not only on the businesses in place at the time the infrastructure is built, but also any other business that moves into the service area within a year after the completion of the infrastructure construction. This means that 51% of the aggregated FTE jobs created or retained by all of these businesses must be taken by low and moderate income persons. Because of the significant difficulties in implementing this, most grantees cap their investment in infrastructure projects related to the low-mod income jobs national objectives at less than $10,000 of CDBG assistance per full-time equivalent position. Finally, let's talk about job training activities for economic development projects, because jurisdictions want to ensure that local residents have the skills needed for the jobs that are being created. Sometimes job training efforts are standalone classes that are not tied to a particular industry or a specific job. These classes tend to focus on basic topics such as resume preparation, interview techniques, or computer skills. In other cases, the job training is related to placement and is for a specific position or a skill. Both approaches to job training are possible under the CDBG program. Note that when the CDBG program talks about job training, it usually refers to training for unemployed persons or underemployed persons seeking to obtain a different job. The term is not usually meant to refer to the business planning, technical assistance, and training that might be provided to an owner of a business as a part of an economic development project. However, under the microenterprise category, as we have already mentioned, there are significant flexibilities for providing assistance to owners of micro businesses, which might include giving him or her assistance which they use to train their employees. Job training may be undertaken under several different eligibility categories depending on the type of the assistance and on its purpose. The most common way of doing general, not position-specific job training is as a public service. Those costs would be subject to the public services cap unless the job training is provided by a CBDO. In addition, as I have already mentioned, job-specific training may be provided as a specific economic development activity. This is outside of the public services cap, but is subject to the public benefit standard. Finally, job training can be part of a CBDO or a microenterprise activity. Obviously, these activities would need to meet a national objective. Next, we'll talk about national objectives that relate to this particular economic development activity. The CDBG program rules state that in order to be eligible for funding, a CDBG-funded activity must qualify as meeting one of the 3 national objectives of the CDBG program. This requires that each activity, except for those carried out under the basic eligibility categories of program administration and planning and capacity building, meet specific tests for benefiting low and moderate income persons, either under area, limited clientele, housing, or job spaces, preventing or eliminating slums or blight under area or spot basis, or meeting other community development needs having a particular urgency because existing conditions pose a serious and immediate threat to the health or welfare of the community and other financial resources are not available to meet such needs. On our next slide, we'll talk about low and moderate income jobs. And most economic development activities are conducted under the low moderate income job creation and retention national objective. This national objective addresses activities designed to create or retain permanent jobs, at least 51% of which will be made available to or held by low moderate income persons. The number of jobs that are created or retained is calculated on a full-time equivalent basis. To meet this national objective for new jobs, the grantee needs to document that at least 51% of the newly created positions were taken by low-moderate income persons or that they were made available to low-moderate income persons. In order to determine the percentage of low-moderate income job takers, the grantee must either document the income of the person taking the job or that the person meets one of the low-moderate income presumption categories that we will discuss on another slide. Remember that the salary of the newly created job is not relevant for the purposes of determining low-moderate income job creation. The documentation of low-moderate income is based on the income of the new employee at the time he or she took the position. In other words, it is based on their existing family income and not on the new job that the CDBG assistance helps to create. One of the most common and complex low-moderate income job creation and retention questions relates to the timeline and methods for counting new jobs. Grantees cannot set arbitrary numeric or time frame targets and simply stop counting at that point. Rather, the grantee and business must count all jobs that were created as a direct result of a CDBG-assisted activity. In addition, grantees must document the family income of the first person to take the newly created job and not the turnover in that same position. For example, assume that a grantee is providing CDBG assistance to build a new factory. The agreement between the grantee and the factory estimates that 50 new positions will be created during 2011 and that 30 of these jobs will be taken by low and moderate income persons. Now let's assume that once the factory is built, the company's business takes off and continues to create new positions each month. By the end of 2011, they had created 60 new jobs and they were still growing. By June of 2012, they had stopped expanding. At that point, created a total of 80 new jobs. Any new employees at that point were simply due to turnover in existing positions. In this example, the CDBG program would require that 51% of the actual 80 new jobs be taken by low-moderate income persons. The grantee could not stop counting when they reached the original predicted 50 jobs, nor could they stop when they reached the end of the planned one-year period. This is because the new jobs were still being created, and these jobs were generated because of the CDBG investment in the factory. In addition, the grantee or business is going to document the family income of the first person to take each of the 80 new jobs. They do not need to document the income of the people who take the same 80 positions when they turn over. For jobs that are retained, the grantee must demonstrate that the job would be lost to the employee without the CDBG assistance. Of the retained jobs, 51% must be currently held by a low-moderate income person, or that job can reasonably be expected to turn over in 2 years, and there is documentation that it would be filled by a low-moderate income person. If jurisdictions fund activities that create jobs, there must be documentation indicating that at least 51% of the jobs will be held by or made available to low-moderate income persons. And there are a few requirements that apply to jobs to be considered available to or held by low-moderate income persons. The first is the created or retained jobs are only considered to be available to low-moderate income persons when special skills that can only be acquired with substantial training or work experience or education beyond high school are not a prerequisite to fill such jobs, or the business agrees to hire unqualified persons and provide training. And the jurisdiction and assisted business takes actions to ensure that low-mod income persons receive first consideration for filling those positions. And second, the created or retained jobs are only considered to be held by low-mod income persons when the job is actually held by a low-mod income person. For some types of job creation or retention activities, the person can presume that the job taker is a low and moderate income person. If the job taker resides in a census tract or block numbering area that has a poverty rate of at least 20%, and the area evidences pervasive poverty and general distress, the grantee can presume that they are low mod income. If the job taker lives in an area that includes the central business district, the test is 30% poverty and general distress. The grantee may also presume that any job taker who lives in one of the remaining HUD-approved empowerment zones or an area that is 70% low mod is a low mod income person. Also, if the business and the jobs are located in an area that is at least 20% poverty and has general distress, the grantee may assume that anyone hired by this business is low mod income. This flexibility is also offered if the business and job are located in a HUD-approved empowerment zone or enterprise community. This presumption still requires grantees to count the total positions created, but it does not require you to document the income of the job takers. In fact, all job takers can be assumed to be low mod income. You do have to document the addresses of the business and employees and relate this to census tract information. This is a much easier process than obtaining information on income from each individual employee. And you should remember that this presumption only applies to the low mod income jobs national objective and cannot be used for any other national objective. Now, as a general rule, jobs from each business receiving CDBG assistance must be considered separately for the purposes of demonstrating compliance with the requirement that at least 51% of the created or retained jobs benefit low and moderate income persons. However, there are circumstances under which a grantee may aggregate the jobs created or retained by two or more assisted businesses for this purposes. Those circumstances include where CDBG funds are used to acquire, develop, or improve real property, such as a business incubator, an industrial park, or shopping mall. The requirement may be met by measuring jobs in the aggregate for all of the businesses that locate on the property, provided such businesses are not otherwise assisted with CDBG funds. Also, where CDBG funds are used to pay for staff and overhead costs of an entity making loans to businesses, and where no CDBG funds are used to make or guarantee those loans, jobs created by all of the businesses receiving loans during any one program year may be aggregated. Aggregation of jobs can be done under other circumstances, and you should refer to your low mod income jobs regulations at 24 CFR 570.208 for further details. And finally, some economic development projects can be qualified under national objectives other than the low mod income job creation and retention. Micro-enterprise activities can be qualified under the limited clientele category if the owner of the business is low mod income. This is important because it does not require the grantee or the micro-enterprise owner to track the jobs that they create. If the owner of the micro-enterprise is not low income, the project will typically be undertaken as a low mod income jobs activity. Job training activities are usually undertaken under the limited clientele national objective, especially job training programs that are funded as a public service activity. Other than job training and micro-enterprise, the low mod income limited clientele national objective cannot be used for economic development. Some economic development activities can be undertaken as low mod income area benefit activities. This is a little known flexibility and is not commonly used for economic development, but it is certainly possible for some projects. The types of businesses that are likely to qualify under the low mod income area benefit national objectives are generally retail businesses that sell goods and services to a low mod income neighborhood. For example, a neighborhood grocery store or pharmacy would likely qualify under low mod area as long as their service area was primarily residential and at least 51% low mod income. Industrial types of activities do not qualify under low mod area because they do not provide a direct service to the residents of an area. In addition, some types of retail establishments will not qualify if they do not serve their area. For example, an expensive jewelry store, even if located in a low-income area, would not count under area benefit. Finally, some economic development activities can be undertaken as an area, slum, and blight activity if the activity is related to addressing the blighting conditions. Spot, slum, and blight is only possible for commercial rehab, and this national objective limits the type and level of rehab that can be conducted. And finally, I wanted to say that record-keeping requirements for low and moderate income jobs relate to the status of the business, the jobs created or retained, and the low moderate income persons benefiting from its activity. And you should refer to your entitlement program regulations at 24 CFR Part 570, 506, records to be maintained for documentation requirements. And next, Steve Johnson will discuss other aspects of the CDBG Assisted Economic Development Program, including underwriting guidelines and public benefits.
Thank you, Valerie.
You're welcome, Steve.
As you all can tell today, we are spending time touching on just sort of the highlights of each of these requirements. There's a lot to cover. We have a separate training class just on economic development. When we do our basically CDBG training, we spend close to half a day on economic development and national objectives. You're getting all of this condensed into slightly less than 90 minutes. So we realize we're giving you the high-level information, and you're going to have to follow up if there are particular areas that you're less familiar with and need to learn more or want to learn more. And to tell you the truth, the public benefit standards is one of those areas where I think you will definitely want to read the requirements carefully and make sure you understand them. Now, we're moving on from talking about eligible activities, as Mark and Valerie talked about, and the national objectives, as Valerie described for you. And we're going to talk about requirements for evaluation of economic development projects and the public benefit standards. There are two approaches to economic development project analysis that are described in our regulations. The first are voluntary, a set of underwriting standards that HUD suggests grantees use when evaluating potential projects. The second are the public benefit standards, which are mandatory. And those are, as Mark described earlier, a set of mandatory numeric standards that mandate a minimum level of benefit out of economic development assistance. So first of these is the voluntary underwriting guidelines. The voluntary underwriting guidelines provide suggestions for the types of criteria that a grantee can use in evaluating proposed economic development activities. You do not have to use these specific guidelines. The regulations make clear, as does the statute, that these are voluntary. However, our regulations do expect that if you don't use these guidelines, that you have some level of underwriting, that you have some sort of guidelines that you do use. Frankly, these guidelines are pretty basic, and I would hope that they are already part of a review process that a grantee is using as part of their project review process. Now, the first guideline says that the grantee will assess that all the project costs are reasonable. Now, OMB Circular 887 already requires that all costs be reasonable, so this doesn't really add anything that you don't already have to do. The second guideline suggests that all of the financing be committed to the project. This requirement helps to ensure that the project will actually get completed because you know that all of the resources are actually tied together there. Next, the guidelines suggest that the CDBG funds not take place of other non-federal funds. This is, again, consistent with OMB directives, which seek to ensure that CDBG money is actually additive or is a necessary gap filler, and that you're not simply swapping out one public source of money for another. Next, the guidelines suggest that the grantee ensure that the project is financially viable. You would certainly hope that grantees would make sure that a project is financially viable before they invest their precious CDBG money into it. And somewhat related to that is ensuring that the grantee determines that the applicant business is getting a fair and reasonable rate of return on the investment of their project, and that the business is not getting a financial windfall. To do this, you may want to look at other similar comparable economic development deals that you've done, that other communities have done. You can look at private market deals. There are also a number of data sources that some private companies issue that indicate typical rates of return for certain industries and certain kinds of businesses. Finally, the guidelines suggest that the CDBG fund should be dispersed on a prorated basis with all other funds in the project. This is intended to avoid a situation where all of the CDBG money is invested first and then the rest of the deal falls apart, or the other money, it doesn't actually come through, and you're left with an incomplete project that does not get completed, does not meet a national objective, and ultimately you have to pay money back. So we certainly want to avoid you getting into that situation. So those are the underwriting guidelines. They're all pretty common sense, right? Now let's move from those voluntary underwriting guidelines to the mandatory public benefit standards. The CDBG regulations, and in fact the statute, the Housing and Community Development Act, requires that certain kinds of economic development projects show a sufficient level of outcome of public benefit in exchange for the CDBG investment in that business. As Mark hinted earlier, these are triggered by 3 different types of economic development activities. One of these special economic development activities funded under the statute and under our regulations at 570.203. In addition, if you have a community-based development organization that's undertaking the activity, and if it weren't for the CBDO, it would be categorized as a special economic development activity. Guess what? It is covered by the public benefit standards anyway. Finally, certain infrastructure activities that you undertake are going to be covered, but as Valerie I think also mentioned, only if the cost per job is more than $10,000 compared to the CDBG assistance. We set this standard in essence saying if the cost per job is less than $10,000 for these infrastructure economic development projects, we're assuming that the cost is already reasonable. Now, there are some kinds of economic development activities that do not trigger the public benefit standards. Microenterprise, commercial rehabilitation. If you do the land acquisition or demolition, inexpensive levels of infrastructure assistance, environmental remediation, those do not trigger the public benefit standards. Now, the regulations establish 2 different numerical definitions of what is sufficient public benefit. Think of this as sort of a 2-by-2 matrix, because there's 2 different ways to quantify public benefit, and then there's 2 different measures that we undertake. You can choose among these 2 ways to measure public benefit at your choice, depending on what makes the most sense for the kind of activity you're talking about. The first public benefit option is to demonstrate that the activity that you're about to undertake is creating a sufficient number of jobs relative to the cost. There are a couple of things to think about it here. First, this is not related to low and moderate income jobs under the national objective. This is talking about all jobs that are being created by this economic development activity. So, under the public benefit standards, while you're still looking at permanent full-time equivalents, it's all the jobs, not just the jobs for meeting the national objective of low and moderate income job creation. So you could have an activity that is being done even under the area benefit low and moderate income benefit national criteria, but you could still use the job creation public benefit standard. For example, let's say you're assisting a bank to move into a very poor neighborhood that's underserved by financial institutions. Now, maybe they're not creating very many jobs that are going to low and moderate income persons. You know, the loan officers, et cetera, perhaps are higher than the minimum. But you are nonetheless creating some jobs. You might decide to categorize that for national objective purposes as providing goods and services to the residents of the area, but for the public benefit standards, you might choose to count the number of jobs relative to the cost, because perhaps it's a fairly low number. The second possible approach to demonstrating public benefit is to show that the activity provided goods and services to an area that is principally low and moderate income. Now, this does sound a little bit like the area benefit national objective requirement, but keep in mind, again, it's different. When this part of the regulation discusses goods and services, again, just like under national objectives, it generally means retail or consumer services activities. If you had an activity that was located in a lower income area, but was not necessarily serving low and moderate income persons, this would not be a good choice. For example, Mark noted the Porsche dealership example. Another example might be you have a neighborhood that's starting to turn around and is perhaps even gentrifying, and you're able to snare a fairly high-end gourmet grocery store deli. That may be a desirable benefit to the community, but that doesn't mean that lower income people can necessarily afford, you know, $25 a pound imported cheeses and high-priced wines. They may not be shopping there. So that it might not be a good choice to try and say that you're demonstrating public benefit based on goods and services to the area residents. That doesn't mean that you don't want to undertake the job. That's just not the best choice. It also, keep in mind, does not mean that you have to demonstrate that the low and moderate income people are actually shopping at these retail businesses. That's not what I was talking about. It just has to be goods and services that are available to the people. Now, I would hope this is also obvious, but you never know. Industrial-oriented projects are not a good choice under the goods and services for area residents public benefit test. I once saw a community that I won't name that made a legitimate investment in a business that like sold forklifts and front-end loaders and dump truck snow plows and things like that. Well, people in the neighborhood weren't buying forklifts and steamrollers. So that was not a good choice there. So you have these two different numerical public benefit standards, the cost per job or the goods and services provided to low and moderate income persons relative to the cost. Each activity has to meet one or the other of those. You get to pick which one. We don't care which one you pick, but you have to do that for each individual activity. And once you pick one, you sort of need to follow that all the way down throughout the entire public benefit standards process. And the next slides will show how we actually calculate these caps. So we have two different standards. For each individual activity where the public benefit standards are triggered, under the cost per job cap, that says you cannot spend more than $50,000 of CDBG assistance per full-time equivalent permanent job that is created or retained. What this does is essentially say that you can't spend more than $50,000 a job. Keep in mind, it's all jobs, and this is just measuring the CDBG assistance. There's no limit on other money that is going into the deal. The second option states that you cannot spend more than $1,000 of CDBG money per low and moderate income person in the service area for the retail business. To determine whether a business meets this test, you need to document the appropriate service area of the business and the number of low and moderate income persons in that area. As we've said, this is not based on the people who actually shop at the store. It's not like you've got to, you know, make sure they all get a frequent shopper card and, you know, figure out how many people are there. It's who has access. It's the number of people in the service area. Keep in mind, too, you have to figure the service area out for each business individually. You can't just say that you have a census tract that is 62% low and moderate income, so therefore every business that you assist that's located in that census tract is going to meet this test. What if it's the expensive jewelry store or the Porsche dealership? That's going to have a much bigger service area. You have to look at that for each individual activity. Now, some activities could meet both of these. They're creating jobs and providing goods and services to a low and moderate income area. For example, a supermarket in a food desert neighborhood. You're creating really good jobs for an area that doesn't have them. You're also providing perhaps the most essential retail services of all. You maybe will conclude that it would meet either of these standards. Wonderful. Pick one. We don't care which one you pick. we would say that it fails the public benefit standards here only if you didn't meet either one of these numerical standards. And another important difference between these public benefit standards and the national objective requirements is when they're triggered. These public benefit standards are applied at the time that you obligate the money to the project. They're prospective. In contrast, the national objective requirements are calculated and determined at the end of the project, once all the jobs are created. Here, you are estimating the number of jobs, the likely public benefit, and then you document that. We do say you have to do an after-the-fact assessment to see how close your projection came. We're not going to make the final determination based on that after assessment. We're basing compliance based on your initial projections. Now, if we found that a grantee had a chronic situation where they were seriously misestimating the public benefit over a number of projects, we might ask you to revise your analysis process. But it doesn't mean that just because one project you projected it creating $25,000 per job and instead it ended up being $34,000 a job, that we're not going to come back at you on that after the fact. Now, one other thing that's worth covering that unfortunately we don't have a slide for is that there are certain activities, certain categories of activities we've said do not offer sufficient public benefit under any circumstance. Because these public benefit standards, where they appear in the law, are under the eligibility category of the law, that section, in essence, the following kinds of activities are thus ineligible for CDBG funding. The first is general community promotion and marketing activities. For example, campaigns that market a community or a neighborhood as a great place. Come live /work /shop here. Hold your convention in our city. Those are not going to be eligible. There's no way to measure what the public benefit is. The second is providing assistance to a professional sports team or providing assistance to a privately owned recreational facility that principally provides upper income clienteles with recreational opportunities. There may be some jobs that come about it, but that's not the main reason this facility exists. It's a high income recreational activity. That is not going to be eligible. In addition, you cannot fund land acquisition where the specific proposed use has not been identified. No commercial or industrial land banking is allowed. Finally, you cannot provide assistance to a for-profit business while that business or any other business owned by that same person is the subject of some unresolved audit or monitoring finding that either that you made, HUD made, or HUD's Inspector General made. Basically saying if somebody's already gotten in trouble once, we shouldn't be giving them more money until those issues are resolved. All right. Those were the individual activity standards. Those you look at for each individual business you assist, each individual provision of assistance. We also have these aggregate standards. These are a little bit tougher. Think of these as averages. These apply to everything you fund during your program year. The aggregate test, again, is measured either based on cost per job or cost per low and moderate income person in a service area. Under the jobs approach, the average level of CDBG assistance across all the projects that you funded for that category cannot exceed $35,000 per full-time equivalent job to retain. That's a lot lower than the $50,000 standard for the individual activities. So you can fund an activity that's $49,000 per job. That better not be the only activity you fund all year, because you're going to need to fund some other activities that are considerably below $35,000 a job to average out that high-cost activity. Similarly, the aggregate cap under the goods and services test is $350 of CDBG assistance per low and moderate income person in the service area, compared to $1,000 under the individual activity test. Again, you're going to have to manage this process so that if you have some activities that are costing more relative to the benefit, then you also have to fund some other, shall we say, more economically efficient activities to balance them out. You cannot mix and match here. You can't count one activity, a loan to a given business, is meeting the cost per job under the individual activity standard, and then try and count it under the goods and services for the aggregate test. Once you put it in one category, it needs to be used both for the individual and the aggregate standard the same way. How do we apply these aggregate standards? It's essentially a mathematical process. They're applied to all the activities that are obligated by you, the grantee, during a program year. It's not related to when the money is actually expended, such as loan closing and when you pay out the loan. And it's not related to what program year's grant money is coming out of. It's not tracked on all of your 2010 money. It's what all of the activities that you funded and committed money to during your program year 2010. In order to calculate the standard, you'll have to sort all your activities that you funded out into either the goods and services or the cost per job. You add up all the dollars that you obligated. You add up all of the beneficiaries, either in terms of jobs or low and moderate income persons in the residential area, and divide those into the cost, come up with this number. And it should come out to be less than $35,000 a job or less than $350,000 per person. Thus you calculate an average. At the end of the program year, thus, if you're funding activities under both kinds of public benefit standards, you're going to have two different public benefit numbers to demonstrate to HUD. And we will look to see whether you've met both of those. Again, here's a bit of additional information that is not on this slide. Unlike the previous stuff I mentioned, this is actually a flexibility as opposed to a limitation. There are a couple of types of activities that we say actually have sort of an external, not easily quantified intrinsic public good to them, public benefit. And thus, there are certain kinds of activities in our regulations at 570.209 that we say you can exclude from the aggregate standard. These would still have to meet the individual activity test, but you can exclude them from the aggregate. These would include things like activities that are principally providing jobs for homeless persons or residents of public housing, activities that are providing jobs for people that live in an empowerment zone or an enterprise community, activities that are removing environmental contamination. Now, why would you want to exclude them from your aggregate standard? Well, maybe they cost more per job. Maybe they're between $35,000 and $50,000 a job, and thus it would be to your favor to exclude them from the aggregate standard because they're going to bring your average up. On the other hand, you might want to include them, even if you could exclude them, because perhaps it's a really low cost per job, and thus it'll help bring your average down. That's your choice. Now, some communities decide to set their individual cost per job or cost per service, goods and service, at these aggregate numbers. They do so just to make sure that there's never any doubt that they're going to meet the aggregate standard. And that's fine. That is their choice. All right. Let us now talk about two other requirements to wrap this up. These are two other statutorily imposed requirements, and you need to be aware of them. The first has to do with the restriction on the use of CDBG funds for employer relocation activities. The second is the prohibition on the use of CDBG funds to support federal, state, or local projects that would be using power of eminent domain in conjunction with assistance to private for-profit businesses. Under the prohibition for employer relocation, you cannot use funds to directly assist a business, be it an expansion or a new facility, to relocate a plant, a facility, or an operation from one labor market area to another if that relocation is likely to result in a significant loss of jobs in the market area where the business is now. This is probably fairly commonly called job pirating or anti-pirating. This is talking about economic development relocation. It has nothing to do with whether Johnny Depp can produce any more movie sequels. So don't get confused by the anti-pirating reference. Ha, ha, ha. A few things to consider here. What do we mean by some of these terms? What is direct assistance? Direct assistance means where you're providing assistance to a for-profit business in exchange contractually for their undertaking some project. So for example, if you're making a loan, if you're putting in water and sewer lines to their plant, etc., you are directly assisting the business. What's a labor market area? Labor market areas are defined by the Bureau of Labor Statistics at the Department of Labor. It's an economically integrated area basically tied to commuting patterns. We use the Bureau of Labor Statistics labor market area definitions for this purpose. That could be one county, it could be a metropolitan area, it could be multiple rural counties. What the labor market area is determined by BLS. You don't get to pick and create your own. Now finally, maybe most importantly, what do we mean by a significant loss of jobs? Well, it's perhaps easy to say what isn't. If you're dealing with a business that's talking about relocating 25 or fewer jobs, we're saying that's exempt. That's not significant. If it's over 500 jobs, that's significant in any case. That's big. In between those two numbers, if you're talking about between 25 and 500 jobs, if the number of jobs is less than 0.1% of the employment in that labor market, then that's not significant. If it's more than 0.1%, then that is considered a significant relocation of jobs. So you're going to have to compute this. You're going to have to look and see. Before providing assistance to a business, you or your subrecipients are going to need to get a written agreement with the business. They need to state to you whether this activity that you're about to assist is going to relocate jobs from any of their existing facilities or operations. If so, how many jobs are going to be relocated and from what labor market area? You have to do that even if you've determined it's not a significant enough number to trigger this. You still have to do that. And if the business says, yes, we will be relocating some jobs, they have to certify that neither it nor their subsidiaries is planning to relocate jobs that would result in the significant job loss that would trigger those numerical standards. It's the labor market area based on where they're coming from, not where they're moving to. If, for example, somebody said that, oh no, we're not moving anything, this is all new, and then they turn around and move things anyway, in other words, if they essentially lie to you on their certification, then you are going to have to get the money back from them because you will have violated this statutory requirement. This is not unique to the CDBG program. Almost every other federal program has some sort of anti-pirating requirement to it. All right. Next is the prohibition on the use of CDBG in conjunction with eminent domain. This came about as a result of the sort of now legendary 2005 Supreme Court case, Kelo versus the City of New London, Connecticut, where the city was using eminent domain to condemn private residential property, and then they were turning the properties over to a business for a large commercial redevelopment project. Now, the Supreme Court held that that was a constitutional use of public powers. However, Congress reacted to that, and there was a lot of public blowback throughout the country, and a lot of state legislatures also acted. Congress, starting in 2006, put in language that says you cannot use CDBG money as part of a state, federal, or locally assisted project if eminent domain is going to be used in conjunction with a private economic development assistance. Now, there are a few exceptions. If you can show that there is an overriding public benefit, such as slum and blight elimination, or if it is for public land use purposes, like a park or something like that. There are a few exceptions, but generally, and it does not matter what you're putting the CDBG money into. It doesn't matter if you're not putting the money into the acquisition or the relocation. Any use that you put CDBG money into, if eminent domain is going to be used, you need to check with your field office to make sure you are not going to accidentally trip these standards, because again, this is a statutory requirement. If you trip this, it becomes ineligible for CDBG funding whatsoever. All right. We're just about done here with our actual formal presentation. But before starting to take your email questions, I want to direct your attention to the list of resources that we have here. We have a number of places you can go to get more information. We have the Code of Federal Regulations, where you can go and read these more if you don't have your own copy, the statute. We have our Guide to Eligible Activities and National Objectives, talks about the eligibility and national objectives of economic development activities. We also have an additional separate training just on economic development. It's called the Economic Development Toolkit. And I'm sure many of you are probably looking for even more detail on certain things, maybe underwriting standards or something like that, or setting up a commercial loan program or a job training program. You may want to go through the materials on our Economic Development Toolkit. That may give you more. Now, we're going to be doing a couple more webinars here this month. We're doing one next week for state CDBG program grantees. We will be doing one on March 16th on the Section 108 Loan Guarantee Program. And then on March 30th, we will be doing sort of an open forum question and answer session. You can see that there is on the first line there, we have set up a mailbox, CDBG ED questions at HUD.gov. If you have questions that you would like us to talk about on our March 30th open forum webinar, send them to that mailbox. You will basically control what the content is of the March 30th webinar. And we will leave that up, and that mailbox is already up and operating, and it will stay so up through the 30th. Now, if you have questions about this specific webinar today, the materials we've covered, if you're saying, hey, Steve, you went through the public benefit standards way too fast, or, could you have Valerie explain, Microenterprise assistance again or something? You can use the dialog box there on the computer screen and send those to us. And if we probably won't be able to get to every question that comes in today. There are some that may be complicated enough that we would rather save them for the March 30th webinar. That's okay. If we don't get to your question today, don't sweat it. You don't need to resubmit it to the mailbox. We will automatically take all the questions today and also roll them over for the March 30th webinar. Now, we have one last slide that we're going to leave up for the remaining 15 minutes of our webinar here. This provides a nice, concise summary of the various eligible activity categories for economic development, what national objectives apply, whether or not the public benefit standards are triggered, and as Valerie very importantly noted, what the record-keeping requirements are for each of these. We'll leave that up. By the way, all of these materials, as well as this entire webcast, will be archived. So if somebody else in your office didn't get to watch it, they can go back once and watch it as an archived webinar. The materials will be posted in a couple days as well, so you can download these as well. So this will help give you a bit of a reference point to go by, and we will leave this up. Now, I think we're ready to start tackling some questions. Okay. Can you pay for interior or exterior improvements to a business incubator in an existing building? I guess my answer would be yes. If you're doing direct assistance to the owner of the incubator, you could do that. You could do interior improvements, because that would essentially be assistance to a private for-profit business or assistance to a nonprofit business. If you are only needing to do exterior code-related or facade improvements to a building, you could do that as commercial rehab. You want to add anything else on that, Mark? I know your Mark is also sort of assembling the questions here as they come in. This was the interior or exterior improvements to an incubator.
Oh yeah, if it's a for-profit business, that's fine.
Yeah. All right. Can CDBG financing include the provision of accounting services? Yes, that would be a form of technical assistance to the business. Actually, that ties into the previous question because sometimes business incubators provide those kinds of services. That's one of the things you get besides the space. Can CDBG funds be used for the demolition of blighted structures, clearing the site, conducting an environmental assessment for property that's owned by the government and leased to a private for-profit business? This would make the site more attractive for potential investors. That's kind of a good question, but it's a little tricky. First, which government are we talking about? Are you talking about the local government or the state? If the property is owned by, say, a local government or a local quasi-governmental agency like a port authority or an industrial development authority, that would be eligible as a form of special economic development assistance. Now, you can demolish buildings under clearance anyway. It really doesn't matter who owns the building. But if you wanted to do other assistance, it would have to be special economic development assistance. And again, you've got the question of, what national objective are you going to make? Conducting environmental assessments are a cost of any project delivery. It really doesn't matter. That's not unique to economic development.
Let's try this one. May CDBG funds be used to provide cash backing for a loan guarantee with a commercial lender, effectively leveraging the CDBG funds? Yes, letters of credit have been used in this capacity.
Sure. You can always set these up as loan guarantees, interest rate write-down. The CDBG regulations are very flexible. They don't specify what the financial structure is. It lets you do just about anything.
I think I interrupted you, Steve, on the last question because the conundrum was a private and public business, which we don't really have that hybrid to deal with. It's got to be a for-profit or it's going to be the publicly owned and operated.
Yeah, you can have a business that is partially publicly owned. We have seen some cases where the form of investment or the form of collateral that a lender will take is actually a stock ownership in a business or a share in the cash flow. If that's how you want to structure it, you can do that. That's starting to get fairly sophisticated, and we would hope that you really know what you're doing there. But that's possible. Now, if that's the kind of public/private ownership you're talking about, that's not going to be a problem. I think the issue might be is what if you've created something that is, I don't know, I guess the local equivalent of a government-sponsored enterprise. So publicly chartered but privately owned business. If that was your question, you may want to submit a more detailed question to our economic development questions mailbox for the next time, because that starts getting very case-specific.
Under commercial facade program, how do you determine the service area? Is it a block, a mile radius, 5 miles? How do you determine it? Well, the service area is a function of the activity. So if you're going to assist a business, they know their market. At least they better know their market, and they better want them to know their market. So they're going to be able to tell you where the principal people who are going to take advantage of their service or use their service are located.
It becomes a matter of sort of, think of it as a catchment area. There's actually a term that they use, which of course, just because I need to get that out of my brain right now, it's not there. Every business is going to have a different service area. You cannot, I'm sorry to say, just define it as a 5-mile radius or a 1-mile radius or that census tract. Every kind of business is going to be different. A bank branch is going to have a service area, you know, based on other banks in the area. They can define for you. They know where their customers are coming from. A grocery store is going to depend on the size of the grocery store. You know, a convenience store kind of thing, a 7-Eleven kind of store is going to have a smaller service area than one of these, you know, ultra mega food warehouse things that perhaps is drawing from the entire metropolitan area. Some businesses are serving the entire metropolitan area. If it's the only one of that kind in your entire city, then it's probably the service area may well be citywide. It could be regional. If it's a very unique product, no, I'm thinking, let's say, you know, this isn't the best example, but it's the first one that comes to my mind. A Maserati dealership. Well, generally, there's only one, you know, there might only be one or two of those per state, except in, you know, California or Texas or, you know, geographically huge states. You might have to say that if you're the only Maserati dealership in North Dakota, the service area is the entire state of North Dakota, because anybody anywhere in the state that wants one of your cars is going to have to come to you. On the other hand, a neighborhood dry cleaners is going to have a much smaller service area because there's another dry cleaner, you know, a mile down the road. So it's going to depend on the kind of service, the size of the business, how many others there are in that area. You really will need to talk to the business. You cannot just set sort of an arbitrary figure for everything in that area. You may be able to determine some standards based on the kind of business. That's about the best you're going to do.
Okay. Roofs were deemed not part of business facade rehab. Is this still true? I don't think it was ever true. So yes, we're talking about the entire envelope of the building. So that's the roof, the foundation, the whole enchilada.
Yeah. When we say facade improvements, that basically means the exterior envelope. Roofing could also be a code violation issue, depending on how bad the roof is. You know, if you've got pediments that are severely eroded and are, you know, threatening to fall and conk somebody on the head with a brick, that's going to be a code violation. All right, we're down to about 2.5 minutes left.
Here's an interesting one, the first one, Steve. You want to take that?
Yeah, I was going to say on which one, on more questions. Can CDBG funding be used to develop TV ads and buy airtime for the ads to be given under microenterprise assistance? That's a really interesting question. I would say yes.
Yes, but this is costly. I think it's a program design issue.
Is that the best way to assist the business?
And are you going to make that available to all the businesses you assist?
Yeah.
Equitably?
Yeah. And is this business big enough to support the business that may come in as a result of a TV ad? If they're really a small startup business, you may be setting them up for failure by succeeding too well.
So sometimes things are eligible, but they're not really practical. So you got to take that into consideration. Could we assist public transportation? We have a community-wide bus service that goes to employment centers. Well, this would be, you could assist the public transportation. What you're really doing is you're providing a public service and you're serving the residents of the area, helping them get to their employment. So look at it that way, and that's your national objective to the public service activity.
Now, one way that you could perhaps structure this is, let's say you have a new employer, and let's say it's some big warehouse operation that takes a lot of land. It's got to be out at the edge of the community, or it's outside the city limits in the unincorporated part of the area, ways out. You could provide transportation for the employees to get to that facility. So you could perhaps even, say, buy an additional van and pay for the cost of operation if it is being used specifically to take employees to the jobs at that specific business. On the other hand, essentially running kind of like a bus service by itself is not going to qualify as an economic development activity. It would have to be tied to specific jobs that are created or retained. I think we're just about out of time here. Valerie's telling us we have 1 minute left. Obviously, we didn't get to all the questions that you've asked. You're already asking some very good questions. This is, of course, a very high-level, fast training. There are more things you need to know. There are a lot more ways to find out what you need to know. We are grateful for you joining us today. We noticed that there were over 500 people signed in. That validates what we're hearing is that more and more communities are interested in economic development because they want to help further keep the economic recovery going. They're looking for more ways that they can do that and help support job creation. I'd like to thank everybody participating at your end. I'd like to thank my co-presenters, Valerie Brown and Mark Walling. I'd also like to thank our Lockheed Martin technical staff and additional staff we've had here, Marlisa Grogan, Corey Schwartz, and Kate Dykegraf, who have been coordinating the questions and answers here. So with that, I believe we're out of town. I will thank you very much for participating. Please join us for the Section 108 webinar on the 16th. And for the question and answer forum on March 30th. Have a great afternoon, have a productive afternoon, and keep on doing the good things you do for your communities.